Greetings from New York City. There is a very popular finfluencer named Charlie Chang who does a reoccurring video series where he looks at the top stocks you need to buy that month. He does great videos. I think he's a hardworking, entrepreneurial guy. Nothing against him personally. But I watched one of these videos and it's one of the worst analysis that I've ever seen. And it's something that I have no doubt that a lot of novice investors think is legit. And I want to just expose it, not expose him, but just show why this is just absolute garbage. We're bringing to light one of the best ideas I've ever learned about investing. And it comes from another Charlie, that is Charlie Munger. And the idea is you want to figure out what is stupid, understand why it's stupid, and then avoid it.
If I just avoid all the folly, maybe I can get an advantage without having to be really good at anything.
That idea has saved me a lot of money, and frankly, it's made me a lot of money. So trust me, as it goes on, it gets more entertaining because I ended up finding out, well, Detective Franco comes into play and it's laugh out loud funny, or at least I laughed out loud. I hope you enjoy it. I hope you learned something. Let's get into it.
In this video, I'm going over 6 top stocks for the month of June 2022. For my research, these are the ones I think should be on your watch list. I encourage you to watch until the end to get my full analysis on each of these companies. Kraft Heinz is an American multinational food producer that was formed by the merger of Kraft Foods and Heinz. So right now, one share of the stock is trading at $37.83 with a 52-week low of $32.78 and a 52-week high of $44.87.
Now, I will say, to me, the 52-week range, if it was on a list of important things and unimportant things, it'd be down towards the unimportant things. So I'm not sure why he leads with this, but
here's the one-year price chart.
Price charts don't mean anything to me. There's no evidence that this works. I'm just saying that as if you can find empirical evidence that this works, show it to me, leave a comment.
We have seen some pretty massive gains followed by a recent pretty big correction. We have a market cap of $49.812 billion, P ratio of 30.
I don't need him to read this. I get what he's doing. Maybe he feels his audience doesn't know what this stuff is. Who knows? But I don't find this very valuable. Just to put it out there.
And they do pay a great dividend of 4.01%. A very low return equity of 2.47%.
Metrics like that aren't that useful unless you're comparing them to other businesses in their category. That's the only way to really get a sense of how they're doing, not by looking at them in isolation.
It's always interesting to see what analysts have to say.
No, it's not. No offense to the analysts out there. As an individual, you don't need to pay attention to what analysts think. It's irrelevant. It makes you feel safer about what you're about to do. And believe me, when I was younger, I've done things like this. I've been like, well, look at the analysts. Look at what they say. Sell-side analysts have way different incentives than we do. So keep that in mind.
If you want an even better resource for finding top stocks to buy, I encourage you guys to check out the sponsor of this video, MooMoo.
All these guys are using MooMoo links now. We got to look into MooMoo. There's got to be something going on there. I'm not saying it's bad.
And right now, using my exclusive link, you can get up to 6 free stocks with a free share of Lucid when you make your first $100 deposit.
Hey kids, just remember there's no such thing as a free lunch. Make sure you read the fine print. I find that the brokerages and the apps that have a lot of great charts and heat maps and whatever else he was talking about, they're looking to get people who think they can outsmart the market with information. Keep in mind, I'm in New York City right now, not that far from me. There are buildings full of people that are doing this as hard as humanly possible. Like, this is what they do. And they have all the computational power you could ever imagine, information you will never have. That's who you're competing with. And really, when you play this buy and sell frequent trading kind of game that they incentivize you to do and have tools to make it feel like you can really outsmart the market, you end up getting crushed and they make more money. And that's what they say here. They said, the more you trade or the more margin you use, the more money we will make. The way we make money creates some conflicts with your interests if you trade options. In addition, we may earn interest on any uninvested cash in your account. Yeah, I would never send you guys to this. Let me just be clear about that. Sorry, Charlie.
Citigroup is an American multinational investment banking and financial services company. A 52-week low of $45.40 and a 52-week high of $80.29.
Who cares?
I started for the last year. You can see that the price of Citigroup has been...
Like, if you're a long-term investor, which these are supposed to be long-term picks, that information is not something you care about.
Going down with a slight increase in price recently.
This is really good information. Watch this here.
Price chart for the last year. You can see that the price of Citigroup has been going down with a slight increase in price recently, and they have a market.
How did he make the arrow do that?
A P ratio of 6.3, which is super low.
Charlie, this is weak, man. This is weak.
Analysts are rating it as a 2.4, meaning it is between a buy and a hold. And the average analyst price target is $66.45, which is over 20% higher than the current price of $53.62. Next up is NRG Energy, stock ticker NRG. Right now, one share of NRG is trading at $46.46 with a 52-week low of $31.94 and a 52-week high of $47.
To my point exactly, like, okay, the 52-week low was, what, $32, and currently it's at $33. What good is that information? It doesn't mean anything. So I'm really stuck on this.
Here's the one-year price chart. We can see that
Here we go,
started
guys.
1 year ago at just about $32
Guys,
a share.
the arrow's going to go on the roller coaster ride. This is the best part of the video.
It grew heavily to over $45, went back down to about $35, went back to about $43. Pretty volatile stock. Its market cap is $11.024 billion. They have a P ratio of 2.83, earnings per share of $16.
Do you think he's going to tell us how much revenue they make?
And a great dividend yield of 2.99%. They have a price to sales ratio of 0.42 and a price to book ratio of 2.16. NRG has a
Yeah, I love this. Just tell me lots of numbers without any sort of context or explanation. This is great stuff.
profit margin of 14.95% and a really high return on equity of 122.35%. And last year, they made revenues of $26.79 billion.
I knew it. I just had a feeling.
Which is great. And analysts right now are rating it as a 2.5, meaning it is between a buy and a hold. And the current analyst price target is
I don't care about the analysts. If Charlie's buying, I'm buying, baby.
$45.18, which is just a little bit under the current price of $46.46. Okay, so NRG is not just any old energy company. The energy company reported earnings at the beginning of the month, where it announced racking in a net income of $1.7 billion compared to negative 80.
I love how he's reading off the website's press releases, not actually the 10K or any 10Qs.
Of 35 cents per share or $1.40 per share on an annual basis. And the company's business is appealing to smaller businesses out there.
He's like, and the company has an office, so therefore there means there's people who work there. And if the people who work there are in the shade, that means they're likely going to work better than people who are working outdoors. The number of employees is 1,264.
One notable recent example is Palm Energy LLC, who announced its acquisition of behind the meter solutions from NRG about 1 week ago.
This dude is reading press releases like
The next stock we're talking about is Marathon Oil stock ticker.
Yeah.
Did you hear something?
Marathon Oil is an American oil company based in Ohio and one of the largest oil companies in the world. One share of Marathon Oil is trading at $31.16 with a 52-week low of $10.41 and a 52-week high of $31.16. So yeah, we are at the 1 year high. Here's the 1 year price chart. You guys can see that the stock has performed extremely well.
Hey everybody, put on your seatbelts because we're about to go for a ride. All right.
This stock has performed extremely well. It was pretty flat for the last half of 2021, but since the beginning of 2022, the share price has just shot. P ratio of 11.1.
Hey, I bet this time he skips over the dividends, right? He's not going to do it this time, I guarantee it.
And they pay a dividend of 1.1 as near fair value with really positive performance outlooks. Looking at the profitability, we have a profit margin of 34.7% and a return on equity of 19.54%, which
Again, to be serious again here, it doesn't matter unless you can compare to their competitors. Tells you nothing.
is very good. They've seen revenue in the last 12 months of $6.21 billion.
I love how he sounds excited about those numbers.
And their balance sheet shows total cash of $682 million with a current ratio of 1.1. For their dividend, their payout ratio is just 7.69%, meaning that a majority of the money is going back into the growth of the company. Analysts are rating Marathon as a 2.2, meaning it is a buy, and the average analyst price target is $32.76, which is just a smidge higher than the current price of $31.16. So Marathon Oil is an oil company, and due to current world events, oil prices are much higher than usual. And I know you guys have personally seen this when you go to fill your cars up with gas. The thing is,
I have an H1 Hummer and I just swipe my card. I don't look at the price. I got to burn that fuel.
Marathon Oil did not hedge its position in commodities, so growth in oil prices will actually enable the company's value to skyrocket. The stock price has just gone through the roof. And
this dude doesn't know much about stocks. His research process is the opposite of rigorous.
Crazy growth really reflects this highly favorable business decision. More importantly, in the last earnings report, Marathon report
He's looking at a press release again. What is this guy's deal? Stop looking at press releases.
earnings per share of $1.02, which beat the consensus estimate of 98 cents. Now, the oil company is expected to post earnings of $4.94 per share on $8 billion in revenues, which equates.
It's funny, his inflections in his tone make it seem like he's uncovered something important, right? But he's just reading numbers on Yahoo Finance. But he's like, and the revenue was $77 billion. You're just reading the number to me.
Reducing its outstanding share count.
Finally, he opened up a report. Still not as good as the 10K, but at least it's something.
Now, like I showed you guys, Marathon Oil is at a 52-week high, which is up about 80% in value since the start of the year. As oil prices continue to sit on top of a steep hill, Marathon Oil still has plenty of room to grow, I think, and with the cash
Why do you think that?
flow that is already receiving, we investors can believe that the company will continue to reinvest in itself. Overall, MRO is an
What's the return on invested capital? That's the question you should be asking.
interesting play if you do want to get in on oil right now. And yes, it's a little risky because it is at an all-time high, so make sure to do your own due diligence before investing.
Let me give us some unsolicited, not financial advice. If something has already gone on the ride up, it doesn't mean it can't go up more. There is a strange psychological tendency for us to chase a rising price and just kind of project that into the future, even if it's not rational. Like something that's gone up, let's see, in that time period, it's lower now than it was then. So someone could have easily been like, hey, let's get back in this thing.
Last up on our list is Vertex Pharmaceuticals Incorporated, stock ticker VRTX. This is an American biopharma company and one of the
I can't listen to him read off these numbers again. So showing a press release.
health equity. These grants include clinical
Weirdly, this has a really high replay rate. I'm kind of curious what happens here.
trial diversity, access to quality care, and education of the healthcare workforce. By investing funds into its own expansion.
Stop it. He is, I'm sorry, guys. I have to say this. He's going like a press. The reason I'm criticizing the press release is because a press release is designed to give the media the information required to write a story or record some content about what's going on with this company, right? So it's inherently like a marketing document. The things that they're going to say are not things that necessarily matter to investors, or they're just, vague or fluffy. Not to say every press release is like that, but look what he just said. It sounds like he read the press release and then he's saying it back to us like he knows what he's talking about or that it's important. I want to look this up. Vertex announces $50 million. It says here that the donations are an extension of Vertex's long-standing commitment to inclusion, diversity, and equity in the existing work of the Vertex Foundation to promote these values through education, innovation, and various health programs.
Of health equity. These grants include clinical trial diversity, access to quality.
I want to see, do they say access to quality care? Yo, he's reading the headlines. They're like the little sub headlines: clinical trial diversity, access to quality care. Let me guess: education of our healthcare workforce. Let's see it. Let's see do it.
Care and education of the healthcare workforce. By investing funds.
Yo, we got you, buddy.
Vertex is really reinforcing its name and reputation in the healthcare industry. I don't know about you guys, but I feel like Vertex has so much going for it, and given its longevity and durability in its sector, I do think that they are a very solid healthcare pick. Anyways, those are my top 6 stocks. Yeah, with all investing, make sure to do your own due diligence and don't just buy any stock because it was listed in this video. This is just an analysis of 6 different companies.
By the way, appreciate this. Definitely, he's ethical for saying this and making a point of it. I do think this would be better information to provide in the beginning because most people, and I can tell you from looking at a lot of different data for different YouTube channels, most people don't make it to the end of videos, even if they watch most of it. So this is the information that is probably most important to protect people from themselves. Because I've said before, 10 years ago, I would have bought some of these stocks if I watched this video. You don't have to learn every mistake from your own painful experience. We can learn vicariously from the mistakes of others. And that's something that both Warren Buffett and Charlie Munger not only advocate, but they profited from it as well.
I'm not a financial advisor. I'm just a person making videos on
I'm just a guy reading the numbers on Yahoo Finance.
YouTube. So yeah, make sure to
And reading the press releases.
do at least 1 hour of due diligence per stock that you're considering. Anyways, I hope you guys enjoyed the video, and if you did, make sure.
But he's good at what he does. I don't want to hate on the guy. I don't think, not that I can judge anyone through this medium, but he doesn't seem like a bad guy. I don't get like a gross vibe from him. But again, that could all just be my perception, and that could be wrong. But just going off what this is just pretty surface level and weak. That's my take on it. It's much better than Andre Jick, who's just, I feel like even more, let me get you really excited and talk to you about stuff that I really don't fully understand, but I think I do, and therefore you think I do. Anyway, he's better than that, but this is still a lot of room for improvement here.
And what activity could be more promising than diagnosing stupidity?